Hello, welcome to this video. This is the last video I am going to shoot for the year 2023 as we're heading into the year 2024. As you can see today, it is on the 27th of December, and in a few days we'll be entering 2024. So let me just bring it up from a bigger time frame, taking it to a smaller time frame where I see gbpusd going in the next coming months. Okay, so basically, let's just remove all this. Right, yeah. Um, so I trade SMC. I trade smart money concepts. Yes. So basically, from the GPUSD perspective, we're saying that we're going on an uptrend, right? So on a uptrend kind of trajectory. Yes, and also what I'm seeing is is that there is a head and shoulder pattern right over here. Sorry. Okay, let me just do that. Okay, so let me just put that there. Right. So we have kind of like a head and shoulder pattern right over here. Then this being the neckline, but it was reached with that reversal over here, with that retracement over here. Then it went to the downside. It didn't reach exactly our order block. And also, as you can see, that as the market was moving towards the downside, it was actually wanting to take the order block down over here on a D1 time frame. Yes, so taking that item is not yet ideal because the market has to grab liquidity up on the top over here before it can go to this area over here. So we can see that in this area over here, there's liquidity, right? Because we have people buying the market right in these zones over here, right in these zones. And the market didn't take out those buyers, it didn't take out the stop losses. They'll buy here, put their stop loss below there, buy there, put their stop losses below there, buy there, put their stop losses below. So the market needs to come and clear out all these stop losses before it can actually head all the way up where it really wants to go. Looking also seeing the bigger time frame as well on the monthly time frame, we actually check on how it's actually working out and how it's actually moving so that we can be able to determine the direction. So on the monthly time frame, we can see that we are in a downward trajectory. Where is that? Usually this stuff is always up there. So okay, as you can see, we are in a downward movement. So we might see the market coming all the way down doing that, right? Or here in this case, we have an order block over here. But overall, you can see that as from 1971, as from this year, 1971, yes, we've been going on a downward trend in terms of the GBP USD is concerned. So we are likely to see that the market could actually head up in terms of January, because already this month is going to close up there, and we can already count this as a fair value gap area, as an area where there's going to be fair value gap. And also we can see that the market might head up to that order block going to the downside, right? Going to the downside. So that's what we might see next year. So we might see January opening and going all the way up, because that is an area where the market has liquidity, right? Also, where the market has liquidity is over here, this area over here. We can see that we have equal highs. We have this high over here that wasn't taken out. We have that high as well. So the market didn't actually take out those highs, meaning that there's actually positions up here where the stop losses, where the market needs to go and take out that liquidity. But nevertheless, we might not even get to those highs, or we actually might get to those highs. Yeah, looking at the area over here, where there was a BOS over here to the downside, that was actually a liquidity grab to the downside, right? So we might see that the market might actually be heading and be doing all that in that sense. And from there, let's get it down to a weekly time frame. I've already seen the daily. So on the weekly time frame, you can see that we have that. we have this order block over here, we have these areas here as areas where there is liquidity lying over here, right? So liquidity is lying over here. So we might see the market coming all the way to that order block, like I said, on the bigger time frame, and going all the way down. You can see also we have a fair value gap right over here, right? We have a fair value gap right over here. So we might see the market heading towards that area, then the market coming down also. So we might see that the dollar might actually have a little bit of a hiccup in the next coming months and weeks than in the actual. So we might be looking to long the positions, right? We might be looking to long the positions. As you can see, we have a change of character, and then we have an order block that was mitigated, and to the upside we have here an area of liquidity. So now we've generally the idea where the gbpusd is going, and then now we can look at a smaller time frame and try to look and see if we can be able to find positions to actually get in. So we can see here we have liquidity being grabbed over here with a change of character, so we can get our positions from this zone or this zone over here. So we can actually pull our Fibonacci. So we wait first for the market to actually reverse to the downside. So as you can see here, if the market is to reverse over here, we have the 61.8 mark, with the 78.6 mark. So we in this area here, that is where we might likely see positions being where the market might retrace to, then go all the way up. So we might get positions somewhere there towards the upside. That's what I know I can actually say about the GBPUSD. Then let us move on to another pair which I also trade, which is the EU. Beautiful trades on the EU that I took last time. We can see here on the EU at how I took this trade. So I saw that there was Fed news that came out over here. There was Fed news, which was the interest rates that drove the dollar down. And then from here, so the other pairs would actually go up because, well, they're coats and bases. So now, as we can see, that the market rallied all the way up. Then on the Tokyo session, it consolidated. London came, it rallied all the way up. Then the same thing happened. Then there was a drop onto this area here, which I would love to call a drop, a rally base rally. So this area becomes an area of a base on a bigger time frame, whether it's the 4 hour, the daily, or the 8 hour, it becomes an area of a base, right? Let's take a look at that. Okay, so on the daily, it's not yet it's not a base as such. Maybe on the 4 hour, there's something. Uh, as you can see on a 4 hour, it's a base, right? It's an area where there's a base, so it's a rally base rally. Then usually when it when it retraces to the base, it comes and finds support right here at the base. And from there we see the market rallying up. So how I entered this trade, I came on a smaller time frame, which I think is the 15-minute time frame. I'm not really sure anymore, because I entered here, and also I entered this one as well. So on the 15-minute time frame, I found out that there was a change of character right over there, and I saw that they wouldn't come back to this area over here. Well, due to many factors, but after I saw there was a change of character, I saw that they wouldn't come back because they came into this area, they failed to break through to that downside. Then I entered this trade over here, and the market started moving up. Then from there, the market moved up. As the market was moving up, I was monitoring the trade. I was putting SL below that area over here. Then from there, once I saw a change of character happening again, and I saw liquidity up there, liquidity, I decided to scale up my position and enter another trade right over here within the area where there is actually a um an order block. Sorry about that. The way there's actually an order block, then from there we see the market moving on the upside. So afterwards, the market just rallied through the top because the market was bullish for the euro at this time and bearish for the dollar. Then we have our last pair, which is xauusd, which is gold. One of my favorite pairs, actually, one of my favorite pairs that I have, that I also like trading, which is the gold. So on gold, was huge rallies, guys. As you can see, there was huge rallies to the upside. Gold is now at 2081. ounce. My goodness. So that's quite a lot. If you'd bought gold way back, even like the real gold, like the actual gold, the physical gold, you could be somewhere right now with a good capital that you can actually start with. So that's the last pair I'm gonna be doing for on this video, and from there I would like to also touch on synthetic indices, just a few of them, just two of them maybe. Okay, so on gold we can see that was happening on the H4 time frame. We see that there's a break of structure to the upside. Then the market retraced right onto this area over here, right? So we mark that area. So called, we should just do for learning purposes, and see why it actually retraced to that area instead of in other area. So as we can see on gold there, we have that area over here being an area of interest. So we need to mark that. So actually it was actually after a break of structure, they actually changed character over here. As you can see, they look like a quasimodo pattern to the upside. So they've gotten a trade over here, but anyways, we missed that one. But we see that there was a break of structure, then they came to this order block, they didn't come to this one. So we can also, in order for us to actually find the sweet spot to find out where really gold is going, we just pull up our Fibonacci and put it up there, and you see that it was at the 78.6 mark. And you see that in that area, that's where gold retraced, and gold decided to go all the way up afterwards. So Fibonacci is one of the important tools that one should be able to use when trading these financial assets, especially gold. Usually follows most of the time the Fibonacci retracement aspect. So use that as well to level up your playing field on gold. Okay, so that's what we have on gold. Sorry, my network is a bit tricky, so yeah. And then from there, I took a trade on gold right in this area over here. I'll just show you, not on the H4 time frame as per se, but I did take a trade on the 15 minutes. Is it the 15 or the 1 hour time frame? I think it's the 1 hour time frame. I think it's the 1 hour time frame. I'm assuming it's the 1 hour time frame. No, it was a 15 minute, sorry. It was a 15 minute. Most of the time I take my trades on the 15-minute time frame. Okay, let me just show you what happened around that time. Because there was a fundamental that actually came through. There was news that came through in that area, and I traded the news, and I managed to win the news. And yeah, that's what happened on that time, around that time. Okay, there we go. 15 minutes. So this is what I did on the 15 minutes. As you can see, there's actually drawings there. So I saw gold moving up, changing character right over here. Then the next thing is I pulled my Fibonacci from up to over there, and I said it's either gonna retrace on the 50 percent mark or on the 61% mark, right? So what gold did is it came, retraced in that area, and I saw that there is a bearish flag, a bullish flag that was forming. As you can see, this was kind of a bullish flag that was forming, and there was the third touch over here. I'm sure you can see that. There's a third touch, which is one, two, three touches to the low, and from there it broke out of that zone. So what I did was I entered this position over here, and I placed my stop loss below the 50% mark right over there. And then when news came, news shot down, then it went up and closed above that zone. And then from there, I knew that gold was going to go up all the way up to the end over there. And gold did actually move all the way to the top during the New York session, also during the London session. And I did manage to take some of my profits over there. And also, I was also looking at that as well. So I was also looking at the 61.8 mark, but I was like, nope, let me just take some of my profits over there, and I let some trades run and took some profits over here. So but I'll count this one as well because it was a 1:2 trade, 2.36 trade. And from there, I'm sure you can be able to be taking trades all the way even up to here, from this area here, taking it to the all the way to the top over here during the London session and the New York session, you can be able to take a trade over here. Also, yeah, a trade over here, you can be able to take it using that zone over here, because there's a break of this area over here. Let me just highlight that for you, because this area was an area of resistance. Just put let me put that. This area was an area of resistance because the market was came up, came down, came up, came down, came up, came down, came up, came down, broke through that area, then went up, then found support in that area. Previous resistance becomes current support, then boom, and from there the market went up. Same thing over here, and God kept on doing that and that. And even today also, it was a good trade here. After a change of character, it came down to the order block, boom, when closed up. Then you take your trade from here all the way up to the top over there, or right at the close of the London session. So yeah, that's what I have for this video. So thank you for watching, and I hope you learned a lot, and you can keep on learning a lot and being able to identify trades and being able to be professional, to be profitable in the year 2024. Have a lovely new year and a peaceful one.